Excel accounting practice problem, pay bills form, check form. Get ready because we're about to excel with Excel. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, we got two tabs down below, example and practice. Example tab in essence being an answer key. Let's take a look at it now. We're going to go through the pay bill process. To do so, we want to first enter the bill, recording the transaction that would be related to it, to the trial balance, the general ledger, and the subsidiary ledger, looking at the financial statements, and then think about the pay bill process and what will happen when we do that. Note that in accounting software, this will typically be driven by forms that will help with the data input process, and then the data input will be a little bit easier. What we're trying to do is see what the behind the scenes is when you enter the form. So for example, the first bill, as we saw in a prior presentation, might look something like this. Looks like kind of like a check form, but the bill means accounts payable is going to go up. We would select the vendor, the person that we will be paying, and then typically an account down here, or if there's an inventory item, selecting an inventory item. The account might be an expense account, utilities. It might be something like equipment that we're purchasing, fixed asset account. It might be inventory, in which case we'd have to track the inventory as well. Then that would increase the accounts payable. That's our focus this time. We're focusing in this time on paying the bill, which in accounting software might look something like this. You'd have a list of the outstanding bills, which represent amounts that you owe, increases in essence to accounts payable, selecting those bills and then paying them with some form like a check form, or some form that indicates a decrease in the checking account, like a transfer. And so you might select those and record them at one time, a screen like this helping you to sort those outstanding amounts that need to be paid. And then if you were to drill back in on an individual form that was used to pay a bill, it might simply be called a check form, or some kind of form that would increase or indicate a decrease to the checking account. But oftentimes they'll differentiate a pay bill form from other checks or other electronic transfers, because the pay bill form might have something on the bottom like this, which will not be the standard kind of check form, which you would have similar options as we saw on the bill, which would include accounts or expense accounts, or accounts that you could select like a utilities expense or the equipment. You're not having an account and you're not selecting accounts payable down here. Instead, it's indicating the bill that this check is connected to, because this check is paying off on a bill, which means accounts payable is going down. If you want to know what the account was affected when you purchased the bill, like the expense account or the asset account or the inventory account, you would then have to go to the related bill that was paid off, because that's the point in time that we actually recorded the expense or the asset or the inventory. Now let's see what would happen with these transactions in terms of the journal entries up top. That's where we're going to focus in on here, so we can see how this whole thing would kind of tie together in terms of how it would be recorded in, say, the database system to make the financial statements. Going back to the practice tab, let's record that now. So the first one, we're going to record the bill. We did this in a prior presentation. We'll do this a bit faster this time, and then we'll pay off the bill. We're starting over from scratch. We don't have the same bills that we entered in the prior presentation. So I'm going to say 115. Let's say that we paid for office supplies. We went to like a Home Depot or something. We purchased something on account. We haven't paid cash. We're going to pay it in the future. We would then be increasing the office supplies. We're going to say it's an expense because it's below a certain dollar amount. We're not going to be putting the office supplies on the books as an asset. So expense account is going to be debited, and then the other side is going to be the accounts payable account. We're going to say that we paid, let's just say $750 this time, debiting the expense account, because expense accounts are always going up in the debit direction. The accounts payable is going to go up with a credit, so I'm going to say negative of that $750. We might also indicate that this is a credit by indenting Home tab alignment indent. Now note that, again, the expenses basically are debit balance accounts. They usually go only in one direction, up in the debit direction. And we know the payable is going up. It's a credit balance account. It goes up by doing the same thing to it. We always do the same thing to it to increase it. In this case, a credit, increasing the accounts payable. If we post this out, we're going to go to the supplies. The supplies are down here in the expense area. We're in cell H19 equals, pointing to that 750. And then we're going to say this 490 went up by 750 to 1,000 240. We're out of balance by the 750, and we could see the net income went down because this is a credit balance. This is income, not a loss. 24,710 minus 750 to 23,960. Then we're going to post the accounts payable, which will be here. So accounts payables in H10 equals the 750 credit. So this went from 1,600 up in the credit direction. It went down on the number line in the whole to 2,350. But from a debit and credit standpoint, it went up to 2,350. So then we're going to post this same information in the GL. I'm going to look for the supplies account, which is somewhere in between on the supplies. So I'm going to find that. I'm going to go over to the GL. It's in the same order: assets, then liabilities in orange, equity, the dark blue, and then we've got the income and expenses. Looking for the supplies expense. There it is, office supplies in AQ5, 115. We put our cursor in AR5. I'm going to say equals, hold down the left arrow until I hit the wall, all the way to the wall. Then I'm going to go up to that 750. You could also memorize the cell, which is C2. So there it is. You could double click on it, equals C2. The 490 went up because we did the same thing to it, debit and debit by 750 to 1,240. That 1,240 should be what is on the trial balance. Scrolling all the way back to the trial balance, there it is, 1,240. We're out of balance on the GL now until we record the second half. So the second half is going to be in the accounts payable, the 750. That's the first orange account, first liability. So I'm going to scroll to the right, assets, and then the first liability, first orange account. I'm in cell W17. 115 here. Now I'm in cell X17, equals, holding the left arrow till I hit the wall, scrolling up to the last transaction, looking for that accounts payable. There's the 750 in cell D3, enter. I'm going to double click on this item. You can see you could just memorize and type in D3. Remember, you could just type in negative 750, but you want to use references if applicable, because note, if something's wrong, something's out of balance, I need to find something, I could use these tools up top and point to where they came from, which is really useful. Those tools, by the way, are in the formulas tab right here. I like to put them up top in the quick access because I use them quite often. They're very useful to me. So that makes them go up by 1,600, up 750 to 2,350. That 2,350, then also here on the trial balance, we're back in balance on the general ledger. Next, we're going to then record this to the accounts payable subsidiary ledger, the ledger subsidiary to the general, because it's going to add up to the same amount but ordered by vendor instead of by date. That's all the way to the right, past the general ledger. There we have our subsidiary ledger, which we could see is out of balance, indicated by the negative 750. We're going to assume this is vendor 4, which I'm going to say is like Office Depot, 115. I'm in cell BL7. BL7, I'm going to say equals. Hold down the left arrow till we hit all the way to the wall again. So I'm just going to hold it all down till we get to the wall. Find that 750. Credit, there's the 750, and enter. You could memorize that that was in cell D3. Just type in equals D3, increasing it from 0 by 750 to 750. If we add up all 4 vendors now, that adds up to this 2,350. We can see the 0 here indicating we're back in balance. That 2,350 should be what's in the GL, as well as what's on the trial balance. Over here, there's the 2,350 on the trial balance. Now let's assume on 120, we're going to pay that thing off this time. So in accounting software, you might be using something like this. You'd be sorting out your bills, seeing which one you want to pay. We pick one bill. Let's imagine we picked one bill. It happens to be that one that we're looking up top, which I know is different in dollar amount than this here, but it's just an example. And then we could pay it off, which would generate, if we drilled down on the form that we paid off in a check type form, or some form that would be similar to a check form indicating a decrease to the checking account, which could also be a transfer or something like an electronic transfer that's just electronic decrease to the checking account. And the bottom of it would indicate the fact that it's tied to a bill, and then the bill is where we actually recorded what we purchased, in this case that being the supplies, which could have been inventory, it could have been something like equipment. So now we're going to record that second half when we pay it with like a check or something that's going to decrease the checking account. Whenever the checking account is impacted, I'll usually start to construct my journal entry thinking about cash first, because that's the account we use most often, the one therefore that people usually get a better handle on in terms of debits and credits. And people usually start to think about debits and credits as if they always increase or decrease in accordance with what they do to the checking account, which kind of is a trap that people fall in because of the fact that we deal with cash so often. But let's not think about that. Now we're going to say this equals the checking account. It's going to go down. Now also note that I put it on the bottom because generally the credits are going to go on the bottom. That's just a tradition. If you have a long journal entry and you want to put the debits on top because you're trying to think through it or because it makes more sense to you, go ahead and do that. As long as your debits and credits are formatted properly, that will be fine. But if it's a simple transaction, you want to be in conformity with the normal conventions. So we're going to say then that's going to be a credit of $750. We'll then debit the accounts payable. So accounts payable is going to go down with a debit. Note, we know it's going to be a debit because it has to be the opposite of what we did to the checking account. And we credited the checking account, and we usually have a good idea of what we're going to do to that. So therefore, we're going to have to debit the accounts payable. We also know we have to debit the accounts payable because the accounts payable is a credit balance account. That's the normal balance. And to make something go down, we must do the opposite thing to it, which in this case is a debit. So now let's record it out. We're going to say let's record the accounts payable. So there's something in it already here. So I'm going to double click on it, go to the end of it, say plus, and then point to that $750 in accounts payable in our transaction. That brings the transactions back down to 0, netting out the 2. That brings that 1,600 back to 1,600. Checking account now going down. That's up here in H4. This is going to be equal to that 750. This is a debit balance account, normal balance. That's a credit opposite. Therefore, it's going to make it go down to 99,250. So there we have that. That puts us back in balance. Notice that the second transaction here, even though we paid cash, did not affect net income. No impact on net income. Net income was impacted by this account, which was when we put the bill on because we purchased an expense, and that happens on an accrual basis at the point in time we enter the bill, because that's more likely to be the point in time that we actually consumed the supplies or the utilities or whatever if it was an expense account that was impacted. So we're going to enter, then we're going to record this to this accounts payable to the general ledger, or this whole transaction to the general ledger. So let's go to find that accounts payable on the GL, which is going to be the first orange account. So there's the accounts payable. We said this happened on 120, I believe. We're in cell X18. I'm going to say equals. Hold the left arrow down till we hit the wall, hitting the wall. Scrolling up, we're going to find then that 750 in C5 and enter. If I double click on that 750, you could simply type in equals C5. We now see that the accounts payable went from 1,600 up in the credit direction to 2,350. Then it went back down with a debit, doing the opposite thing to it, back to that 1,600. That's the trend we would expect to see in accounts payable. It will not always be like that close together. It could be a little bit more complex since we have many different vendors typically we're dealing with. But if you look at the accounts payable account, it will always be going up with a bill type form. Unlike the checking account, which has a whole lot of different things involved in it, the accounts payable will always be going up with like a bill type of transaction if we're using forms instead of journal entries. And it'll always be going down with a pay bill form when we're paying down the bill. And we should be able to go through the accounts payable and kind of tick and tie off. We should be seeing it going up and down, matching up the bills and the pay bills. So that then brings us back to that 1,006, which should be on the trial balance here. We're out of balance by the 750 till we record the second half, which is right there. Let's record that second half on the checking account. Here's the checking account on 120. We are in cell L5. I'm going to say equals, point to that 750. And there we have it. So that went from 100,000 down with a credit because we're doing the opposite thing to it. Anytime we do the opposite, it's going to bring it down to 99,250, matches what's on the trial balance. GL back in balance indicated by the green zeros. Now we also need to record this accounts payable on the subsidiary ledger. So breaking that out, noting, go all the way to the right, it's a subsidiary ledger to the general ledger because it's going to come out to the same amount all the time, but broken out in a different way, ordered by vendor. We see that it's out of balance by that 750. We're going to imagine here it's vendor 4. Vendor 4 we're going to imagine is Office Depot or something that we purchased from. So 120 down here. Then I'm in cell BL18. I'm going to put the equals button. Hold the left arrow down until we hit all the way to the wall again. All the way to the wall, hitting the wall. Scrolling up. We're picking up that 750 debit in the accounts payable. That's in cell C5. You could also simply type in C5 here if you so choose. Note that if you just typed in 750, that will work too. But if there was a problem, I use these tools up top to see where that cell is coming from, and you can't do that if you just kind of hard code the numbers. So the more you tie things together, the better that will be. Typically, these icons are in the formulas tab. Note, so they're here in the formulas tab. So keep an eye on those items. I would use those and use formulas when you can. It went from 0 up to 750 to 750, back down 750. This same trend as we saw in the GL account should be even more clear and easy to see when we think about the individual vendors activity, it going up with a bill and then it going back down with a pay bill kind of transaction. It should be easier for us to tick and tie those two things out and see that the items that have not been paid by us, we're paying the bills, right? Then we could see the ones that haven't been paid and basically connect those two out. Now, if we scroll up top, we're back in balance indicated by the green 0, adding up all 4 vendors here. The ending balances adds up to 1,600. That 1,600 should be what is on then the trial balance as well as the general ledger. There it is. Note that if you put this into a database program, what you would probably do is enter the bill here, enter the pay bills, then you'd run the reports. Those reports usually not being a trial balance unless you like seeing the trial balance, which I do oftentimes, but most people will pull up the balance sheet and the income statement and look at the fact that we're back in balance. So that works here. And you can see when we created this balance sheet why that is. And then we recorded the supplies expense when we entered the bill, not when we paid it, affecting net income. And then you might drill down on one of these accounts, like the accounts payable. That's where our focus is. If you drill down on it in software, say double clicking on it, zooming in on it, that will typically take you to a GL, general ledger type of report, which might be called something else like a transaction detail report or something, but it's the same thing. And then we'd say, okay, there's the accounts payable. You could see then the activity that is happening on a date by date format. However, that date by date format, although it gives you some nice activity, does not give you who we still owe money to. It doesn't tell you where that 1,600 is still owed to. We could go back and dig out, ticking and tying off what we have paid out and try to figure out where was the bills that actually make up that 1,600 that is still remaining. But of course, we would like to refigure this another way. Most likely you would run another report, which would be a subsidiary report, which you might not call a subsidiary report, but it's subsidiary in that it's going to add up to that same balance ordered in a different way, possibly a vendor balance detail, a vendor balance summary, a vendor balance aging report that would look like this, which gives you your information by vendor, and then you could see the activity on a vendor by vendor basis to see what would happen on a vendor by vendor. Now note, in software, you also could run this report many different ways. We only have so much we can do in Excel because you have it's like one sheet as compared to a cube in a database program. Like a cube, you can pull together multiple different sheets and then, put them together in different order. So you can have a similar report by aging, like how old the transactions are, and you can sort it in different ways. You can have a summary report and a detailed report. But they're all, in essence, the same in that they're subsidiary to the GL because the 1,600 needs to tie out to the GL. The trial balance is probably not something that many people, unless you like looking at it in debit and credit formats, look at, but it's usually traditionally thought of as the building block document to create the financial statements. In other words, usually goes, you record the the journal entry, post it to the general ledger. The general ledger is used to create the trial balance. The trial balance used to create the financial statements. In practice and software, then you enter the forms. The forms then create magically, the financial statements, and then you'll zoom back down on the financial statements, kind of like an auditing procedure, going back and drilling back down to say the general ledger, and then generate other forms like the subsidiary reports. That's how it will typically work. Note that if you are using software and you get used to the trial balance, it could be a nice quick form to look at oftentimes, because then instead of opening up the balance sheet and income statement, you've got your trial balance in one format, one list of accounts, that all the accounts that have activity to them, and you've got the balances, and you don't have any of those subcategories like total assets, current assets, and that stuff, which increases the size of the report a lot. So you get a lot longer of a report. So if you're just trying to see what happened to each account, you'll have to deal with debits and credits instead of a plus and minus format. But even using accounting software, it's often nice to go to the trial balance because you can get to one report and kind of tick and tie off what actually happened, going from the data input like a form, bill, pay bill, to the trial balance, then drilling down on the trial balance to get, in essence, to the GL, which is like a transaction detail report.